Hey, good morning. This is Mayor Valensky with a driving market. Driving while talking. Markets, just correcting my earphones. Hope everything's okay. Everything said in this piece is an opinion only. Let's kick off. So yesterday, Citizens Bank of Carolina in the States bought up the deposits and some of the assets of SVB, Silicon Valley Bank. That's already news, was out there, and that caused an easing in the stress factor within the banking sector. Citizens Bank shares shot up 53%. So the question is, will there be more buyouts and other banks that are going to now take it over, the second tier banks, and give reassurance to the consumer, to the customer, to the account holders that everything now is under control and there's going to be no more banking crisis? It probably is going to happen. So you're going to have some of the major banks now, which are now looking to buy out some of the second tier banks, especially on the retail sector, because that will give them further assets under management, but also it'd probably be some sort of hidden directive from the government to ease and calm down the banking sector, which has going through extreme turmoil. I don't believe personally that the banking sector has finished with this crisis. I think what's likely to happen is you're going to end up seeing a lot more companies, a lot more banks, come under the spotlight, and a lot more banks declaring that they've got financial troubles, especially as liquidity tightens over the next 6 months, 12 months, 18 months. We're not going to go back to the era of cheap money. That's not going to happen, at least for 5 years. And even if it does go back down, you can expect interest rates to stay long term around about the 2.5% to 3%. There'd be periods when the Fed or the central banks will put up interest rates and the periods when they put the down interest rate. But the basis, the foundation of those interest rates would be around about the 2.5% to 3% level long term. Looking into the big glass bowl, which I actually don't have, and I'm not a prophet, I can't really, I'm just guessing what's going to happen in the marketplace. It's based on some evidence, but not really enough to prophesize and say the banks are going to go down. What's likely to happen is, as the banks, whether the first tier or second tier, come out with a crisis, then there's probably going to be a reassurance by the central governments and by the governments and the central banks regarding the banking sector. If it's a tier 1 bank that goes into trouble, like I've stated before, Deutsche Bank and BNP Paribas are just two candidates for that, then the injection of money into there is going to be in the trillions. Moving on to cryptocurrencies, the reason why I'm talking about that is because the CEO of Binance, Changpeng Zhao, formerly known as CZ, has been investigated now, or Binance is being investigated now by the US regulator. So there's been charges filed in the Chicago Federal Court against Binance for irregularities and compliance breaches and misleading authorities and other types of list of charges. Now that sent Bitcoin down $1,000 yesterday, and Binance is the biggest digital asset exchange in the world. So if that goes down, or if that is restricted, or if the criminal proceedings named against Binance, then you really are going to struggle in the cryptocurrency sector. So what's likely to happen is you're going to have a situation whereby cryptocurrencies or exchanges are going to come into the spotlight even more. Remember last year with FTX, Gemini collapsing and other exchanges falling foul, then what you've got now is, Silvergate Crypto Bank also fell, is you've got a lot of nervousness in the Bitcoin, in the cryptocurrency sector. So Binance being being the jewel in the crown, being the solid company exchange amongst that sector, if that goes down or is that in trouble, that will send shockwaves throughout the cryptocurrency sector and prevent any further movement upwards of Bitcoin and other currencies due to nervousness of investors and traders. Interestingly enough, you also yesterday the US Treasury went up slightly, the yield went up because as banking fears receded, the yield went up, the investors sold off US Treasuries and returned into stocks. That's probably going to be more of a temporary measure, especially if another banking crisis or another tier 1, tier 2 bank comes up with particular problems. That is likely to happen, so you could see the yield fall further on US Treasuries if there is a continuation of this banking crisis. Talk about foreign exchange, again the dollar was slightly weaker against the pound and the euro and a bit stronger against the yen. Overall the dollar is throughout 2023 probably likely to get a little bit weaker against the majors, as interest rates are not going to rise any further as far as the US is concerned. But look like inflation in the UK is just going to continue climbing, and that's going to put a lot of pressure on Andrew Bailey and the MPC as to what to do with interest rates. So I expect interest rates in the UK to continue rising. This is Mayor Walensky with Driving Markets. Subscribe, share, speak to you later.